Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. So this week we're talking about closing costs, and we're talking about two main parts of this. One, how they play a vital role in getting your offer accepted, and the other part's going to be actually digging down and finding out what exactly is this term closing costs. For the most part, whenever clients are in the process of saving up for a house, right, the main thing that they focus on is their down payment. Now, there's a ton of programs out there that cover your down payment, and there's some that are starting to even allow to cover a portion of your closing costs, taking a higher interest rate. But I mean, for the most part, and that's something that I would say just 90% of the time when I talk to clients, a lot of times closing costs is something that just kind of hits them from left field because most of the time, that's not something that you hear about. And they play a huge vital role in this current market when getting your offer accepted. So I'll explain how and why that's important. So when we're in the process of submitting offers, the least amount of closing costs we can ask the seller for, the more likely you are to get your offer accepted. The last thing a seller wants to do is agree to pay $6,000 in closing costs, and then the house appraises lower than what we went under contract for, and now they're stuck dropping the price, and then on top of that, they're stuck on paying all this money in closing costs. Now the seller's not obligated to pay that. Of course, as your realtor, my job is to try to help you get as much closing costs from the seller as possible. Now, depending on how the market is, depending on what time of the season it is, how long the house has been on the market, it's going to depend on all those different scenarios on how much closing costs we can get from the seller. If the house has been on the market for a month, 2 months, I mean, it's a pretty safe bet that we'll be able to get your closing costs covered from the seller, but it's still not always a guarantee. Some sellers will hold out until they finally get an offer where somebody's not asking for that much in closing costs. So if this is a house that just came on the market and it's beautiful, nice countertops, nice flooring, I can almost guarantee that you're not going to get all your closing costs covered, maybe not even half of them. So these are the conversations that I have with my clients when I have buyer consultations with them. And I'm saying, hey, you know what? It's good that you have your down payment, but we still might need a little bit of money towards your closing costs if you want to be competitive when we're making offers on houses that look good, that are move-in ready, that are priced right, and that just came on the market. And like I said previously, I mean, I offer down payment assistance programs that will cover your down payment, and even some that will even go to the extent of covering a portion or at least half of your closing costs. So there is options out there, but that is probably one of the biggest reasons why clients won't get their offers accepted is when they're making offers on houses and every single time they're asking for $5,000, $5,500 in closing costs. It makes it real hard to get your offer accepted if you're having to worry about that. So definitely something to consider. When we're out shopping for houses, we want to try to minimize the amount that we ask sellers for. Now let's talk about what are closing costs. Let's talk about what goes into this term, because for the most part, whenever I talk to clients, that's all I refer to it as, closing costs. There's a lot that goes into it, and then I'll break it down for you guys, and you can understand why I'll just say closing costs as opposed to saying all this. This is an example of a transaction that I closed last year at a purchase price of about $260,000, and this gives you an idea of everything that goes into this term that we call closing costs. Now, one thing you'll notice is my compensation is not included in that. I get compensated when I'm helping buyers find a house. The seller that's selling the house will compensate myself as a buyer's agent, and they also compensate their seller's agent, the realtor that's helping them sell the house. Also, the lender's compensation is not included in closing costs. Lenders get compensated when they get your loan and they resell it to the bigger banks. Now I'll detail. This is going to be kind of the boring part of the video, but the very important and vital part of it too is what exactly goes into the term that we call closing costs. The first one is going to be fixed fees, and what I mean by fixed is those don't change depending on when we close in the month. Those will change depending on what title company we use, depending on what homeowners insurance policy we go with. But for the most part, these won't actually change depending on when we close in the month. That part is the second part. So fixed fixed fees that go into your closing costs. Homeowners insurance. So depending on how cheap we can get your homeowners insurance policy is going to limit the amount that we need. This is a pretty reasonable quote at $853 for the year. So this client, whenever you're buying a house, you have to prepay that 1 year in advance. That gets rolled into your closing cost. Title company too. So there's a title company that's in charge of handling the transaction. They handle all the paperwork. They handle the signings. They handle the money transfer, the ownership transfer. They play a huge and vital role in our transaction. That's what that $800 charge is there for. Title policy. Title policy is basically it's a policy that you purchase to guarantee that you're buying a house without any cloud on title, that there's no judgments or any liens. This is your guarantee that when you buy that house, it's clean of any of those. So there's a title policy associated with that. Government recording fees, $45. Processing fees, that's $1,400. Processing fee, that's what the lender charges for their team that goes through and does the underwriting portion of it. They go through the processing part of it. This is not the actual lender's compensation. This is basically taking care of all the other stuff that goes on in the background while the loan process is going. That's a processing fee. Now, these next ones, these are the ones that are variable, and these are the ones where basically I can never tell you, hey, your closing costs are exactly $5,000, or hey, your closing costs are exactly $4,500 or $5,500. These variable ones are going to depend on when we close in the year, and they're going to depend on what day of the month we're going to close. So the earlier in the month that we close, you're going to have slightly higher fees associated with that, because you're going to still owe the days from, so let's say we close, it's January 29th. So let's say we close February 29th or 28th, depending if it's that funky year. You're not going to owe much when it comes to interest for that month. You're not going to owe much when it comes to HOA dues for that month, because we're already at the tail end of that, right? But let's say if we wanted to close instead of February 28th, we wanted to close, March 2nd. You're going to close March 2nd, and you do get a benefit that you're not going to have your first mortgage until May 1st. But for the entire month, from March 2nd to March 30th or 31st, you're going to have to pay those taxes. You're going to have to pay that interest for that time frame that you're going to be in the house. So those are variable depending on when we close in the month. And this particular house closed on October 3rd. So as you can see, their interest for that from October 3rd to October 31st was $1,142. Their HOA dues from that time frame, including prepaids, was $197. Because we closed at a certain part of the year, they had to pay $513 worth of taxes. All this combined was $5,731. Now, we were fortunate. We were able to get $5,000 covered from the seller in this particular transaction. So my clients only had to come out of pocket $731 out of all these closing costs. But as you can see, when we're out there shopping for houses and I'm giving you an estimate of what potentially closing costs are going to be, it's really hard for me to be able to tell you, hey, this is going to be the exact amount that you're going to pay, because there is no way for me to determine exact figures, right? It's kind of a range. Usually the range that I give my clients is anywhere between $4,500 to $5,500. And then obviously if we're closing very early in the month, it'll climb up to that $5,500, $6,000 mark. Now, depending on when we're buying, if we're buying houses and we're looking at houses that have been on the market for a couple of weeks, a couple months, getting the closing cost coverage shouldn't be an issue. I'm very successful helping clients with that. In other cases, when we're going after houses that just came on the market and there's a bunch of offers, multiple offers, at that point, then we would have to have that conversation. Hey, how much of your closing costs are you willing to cover? So that way we can go into this offer more aggressive. That's pretty much kind of closing costs in a nutshell. I'm going to save this video and I'm going to send it to clients going forward, because I thought it was really good to put that out there, especially in this current market on how competitive it is. So if you guys are thinking about buying a house, if you guys would want to sit down and get all of these nuts and bolts out of the way, give me a call, drop a DM, we'll get together and we'll help find you a home this year. All right, guys, thank you much and have a great rest of your day.